Dow, Wolf.
Mm.
A little bit wobbly overnight.
Mm-hmm. Mm-hmm.
Issue is Mr. Omicron.
Very good. Omicron, yes.
We've been working on saying
I know.
Omicron.
We've been practicing the word Omicron because we call it Omnicron, Omicron, on.
Yeah, why they just couldn't have had another gamma, delta, beta,
Alpha.
alpha. So, and it's interesting, Wolf. And we got. I'm just going to bring the CNBC over here, so people can read. We actually can see. We actually read posh articles, not just. So what they're saying here, if I could get up the article, they're saying a new study announced on Monday, researchers from University of Oxford tested blood samples of people 28 days after their second dose of either Oxford AstraZeneca or the Pfizer vaccine. When Omicron was introduced to those samples, scientists reported a substantial fall in the neutralizing antibodies that fight off COVID compared to immune responses seen against earlier variants. So, from what I'm gathered, Wolf, they're saying it doesn't work as well against the Omicron.
Correct. So
So,
what does it mean forward? Well, it's still probably a little bit too early to say, but presumably it all depends, I suppose, Dave, how severe this Omicron might affect us, right? How severely? Is it as bad as the
it
previous
doesn't.
variant, or
I
is it
mean,
softer illness? I don't know. We'll find out.
well, they're still having a few people obviously dying from it, but it seems to be a lot softer, Wolf.
Mm-hmm.
But they say if they give everyone a booster, then you're okay again. But this is what confuses me. How, if the original vaccine isn't working, does the booster work? It must be a different booster. It must have different. It must be. It must. They must have tweaked it.
Look, Dave, I don't know, but if we just probably have to read the finer details on it. So for me, I'm sure they've got the reasons, and I need to probably have a read about it. But I think at the end of the day, let's give them time. December, probably the end of December, we'll probably know a bit more about it, and we'll be a little bit more educated how we're responding to this Omicron from governments to people. So
Because England seemed to be having a big panic about it going into,
yeah, they are, aren't
not quite new lockdowns.
they?
I think hopefully that doesn't mean for us, right? Our government's going to be in a panic and we're going to have renewed lockdowns because that just wouldn't be. It just wouldn't be good for the stock market. It wouldn't be good for us, and I think people are just over these lockdowns completely.
No, I think today, this morning, I saw Morrison say there's not going to be any lockdowns where we can cope. He said we can cope with Omicron.
Okay, the Brits can't, but we can. Yeah, go the Aussies.
Yeah, because the UK are soft, really. We've known that for a long time.
So, Wolf, you're thinking yourself that this Omicron, although it's making the markets a little bit nervous at the moment in the States, you don't think it's going to be too bad for us?
Well, I don't know, Dave, but the thing is the market is still a little bit iffy on it. That's why there's a little bit more volatility. However, I'm hoping with time that, again, we can just get used to it and understand that we're probably going to get more variance. We just got to deal with it. And, like Morrison probably said, we can't just keep locking. So we're going to be open as long as we can cope. We've got the infrastructure in place, so be it. But we just got to live with it, learn to live with it. And I think that's the key here. So while we're still going to have those pullbacks here and back, with the markets getting a little bit jittery every time there's an announcement about the virus, we just got to play the markets. And that's why I'm less, I suppose, wanting to day trade and more looking to long-term type stuff, because there's going to be volatility and you're going to get frustrated.
Yeah, definitely. I mean, this has been a very difficult market to short-term trade. Saying that, we're going to put one little one out today.
Yeah.
We'll talk about that in a second. Now, Wolf, I just want to go through some of the stocks making news today.
Yes, please.
And VRT, this is IVF. They specialize in for babies. So, takeover offer. I mean, it wasn't trading very well. I mean, it was. I think it's opportunistic. They've sort of bought it near its high. It was actually trading sort of beautifully before August, and I think that offer was around that 670 mark.
Yeah, it just shows, right? Just before August was the lockdowns again. Remember in New South Wales and Victoria, and these guys, of course, they are relying on people going to fertility clinics and getting the IVF treatment. So, of course, the share price will probably crash from there. So it did. Opportunistic offer going. We're waiting for that. Thank you very much. We're going to look like geniuses where we're picking this up when there's a bit of a lockdown. Yeah, so look, understandable from the acquirer. But of course, now what does not VHT? What is it? VRT, sorry, does. So that's going to be the response, I suppose, we're waiting for to see what the next step is. But what's interesting, Dave, there's another player in this field, isn't it?
Well, that's the whole reason we want to talk about it. It's MVF. So they've had a little jump, Wolf, today. Now, there is a bit of resistance where it's really struggled to get through to that before around that dollar. Now, I think it's one that everyone should maybe keep on the radar. It's fundamentally it's a decent story. It's actually held, in all fairness, it's held a good trend line really this year, Wolf. It's done very, very well, right?
And you know what? It is a great post-pandemic stock. When things are opening up, people are going to probably go out again, get their treatments and so on. So absolutely, I think this is, you got to watch it on the charts. If it's like you said, it's going to follow you. So give us a scenario and we'll follow it.
And but what I think we need to is just wait till the end of the week, see if this can get over that sort of 99, maybe $1.02, $1.03, and then there's a good chance Wolfie could have a decent run.
I like that. I like the idea. Good.
All right, now Woolworths came out and they're down heavily, Wolf. So I'm glad you had this one on your dividend stocks. Not you had we actually had Metcash, which is looking very, very good, right?
Yep.
But Woolworths isn't. Now what's happened?
I think they've raised that abandoned ship type white flag on the back of a poor first half, sales going well, EBITDA and EBIT going backwards, which I think it's probably normal, right? But investors don't like that. The investors don't like to see poorish numbers like these after they had a pretty good last year, with the pandemic boost where everyone went out to shops and bought extra supplies because, of course, the end of the world was coming. So toilet paper was pretty much all bought out. So look, not unexpected, but really caught market by surprise how poor the numbers were. And I'm glad we went down the Metcash route where I could still see a little bit of growth in the countryside versus the city. So good for me.
I still find that logic in some ways. I understand, Wolf, that some people went out and filled half their room up with toilet paper. I get it. But food-wise, I don't see how it really... I mean, if you take toilet paper out of the equation, food-wise, how does it really change? I mean, at the end of the day, you have 3 meals a day. I mean, there's something else here. Is there margin?
There's probably margins pressure on the back of costs,
well,
right?
That's what I'm
everything
thinking.
Else. So there will be a number of forces, I'd say, to see a little bit of poorish thing. First of all, the demand. Maybe also problems, Dave, is getting some stock, right, in your shops. So we know there's supply chain issues.
Well, that's the point. Now, okay, could those issues, could they affect the Metcashes? Could they affect the Coles?
Yeah, well, absolutely, they can affect everyone. It's just how well you deal with it, how big of an impact it is, what sort of products you sell, what sort of margins you've got. That's the thing. Remember that Woolies and Coles work on really thin margins, right? It's about more than anything else. And I think Metcash, their products are a little bit more expensive, but I'd say they maybe have got a little bit more to play with.
But would you on that result if you were making money on Metcash, get out? No.
In fact, it'd be piling more in.
But okay, but the logic is they could have the same problems as Woolworths. But
they just reported, Dave. They reported.
But going forward.
Well, no. I mean, the thing is, they would have flagged something in there, but there wasn't. So I'm still happy to go with the flow and I'm not going to be predictive of things because, you can be predictive about the markets, about certain stocks. We've done it with AMS. We've done it, about the supply chains, and they keep coming out saying, no, we haven't been affected. We haven't been affected. So you can be continuously down that negative path, you can go with Metcash. But if there's no evidence of it at this stage, even though Woolies might be showing it, it doesn't mean it's across the board in a way, or it's the same impact in a way. So,
well, you know what? That's why I find this interesting, because you've got Coles down today, and it's below trend. If it looks like this is looking at sell. But would you argue then the Metcash model is slightly different, being a bit more upmarket? It's less competitive with these two major sort of companies, Coles and Woolworths. Yeah. It's a slightly different model.
And also, yeah, absolutely, very different model, because also they didn't get rid of their liquor businesses like Woolies, right? Where they listed Endeavour. They still got the hardware stores, not like the other stuff, right? So it's almost like a Wesfarmers rolled into liquor stores, rolled into staple foods. So they are probably much more protected than your Coles and Woolies, were just really now exposed just to food prices, nothing else.
So again, that just confirms what genius you are, Wolf, by putting.
Well, if you didn't know that by now, something's wrong with you.
All right. Now, thank you for that, Wolfie. So CSL are in a trading halt today.
Yes.
They're holding beautifully above trend. A big purchase. Can you just remind us what they bought, Wolf?
Well, they've been working on this Swiss biotech, right? Which I think there have already been rumors about, and the AFI has already talked about it. But they've gone into trading halt today, so possibly we'll hear some news about the actual details of it over the next couple of days. So let's refrain from making assumptions without seeing the details. But we know it's probably that Swiss drug maker.
Okay, at the moment it's sort of holding sort of nicely above trend. IDT. Now, it's in a trading halt, and that's because the government today announced we're going to be making our own vaccines, which is lucky, because it looks like the other ones aren't working for Omicron, so we need our own vaccines. So, Wolf, IDT, what's going on here?
Yeah, look, the governments, Moderna, and the state government of Victoria has announced that Victoria has won, I suppose, a tender to develop mRNA vaccines in Australia, which is good news because, I'm sure there'll be other pandemics down the route, right? So it's good to have some sort of capacity in Australia to do this instead of reliant on another country or another thing. We've seen how all of a sudden there's a bit of a world crisis and everyone for themselves. No one works together. This is nature of humanity, right? They don't get together. They bicker and actually cause even more problems than needs to be. So it's good to have something like that here. And it's probably going to be an ongoing type studies, trials, and so on. But IDT, well positioned because they've already talked about that they've got a facility to produce mRNA vaccines. Whether it's a Moderna, whether it's Pfizer, whether it's one of our own, it doesn't matter. They've got the capacity to do so. So potentially that's probably going to announce. Maybe that they've been selected as one of the preferred manufacturers, potentially, right? We're going to see what happens in the next couple of days when they come out of the trading halt and announce. But it's good news.
Okay. At the moment in the trading halt, it's actually trading above trend. Wolf, so the trade we're going to put out today is GOZ, which is a little bit like we're talking about yesterday with CAA. Capel was Capel trading on a P of 4 now. I'm sorry, but these guys are trading on a PE of
6, I think. So we're going conservative, aren't we? We're going conservative, and why not? We can make a few bucks here and there for Christmas. I can afford to buy you some jocks, Dave. I mean, that's the normal thing, isn't it?
You never bought me a beer. Never mind everything else.
I did take you to a Polish restaurant once.
Did you? I thought I paid, but all right.
Well, you did, but I did take you there.
But it was very nice, that beetroot soup, I must say.
There you go.
I do like the Polish food. Very good, Wolf. So we got this one as a buy at 425.
Nice dividend too, almost 5%.
That's nice, and I think a stop loss will just go under the trend line, which I think it should hold there. We'll go under the trend line, which is about 396, yeah.
Mm-hmm.
And we'll try and target 5% around that 450 level.
Yeah. So look, overall, fundamentally, you've got a pretty strong sector. We've already seen KOF and some other companies in this space come up with upgrades. Doesn't matter how small they are. It's just positive to see there is that upgrade type cycle in this space for the moment. So you're comfortable, right? You're buying a pretty cheap company, good dividends, trading okay. You've got set yourself for the next 3 to 6 months. See if you can pick up that 4% dividend plus maybe a 5% share price appreciation. There's a 10% maybe in the next 6 months.
Yeah, brilliant, Wolf. I think, to be honest, the way this market is being so sort of up and down, I think a few very conservative trades are what's definitely needed.
Yeah, exactly. Why not have a couple of stocks in there that you can rely on, hopefully.
Wolf, on that note, I think that's it. We've got live tonight, which I'm really looking forward to. That's at 7. And
can we talk about one thing, Dave, before you go? I wanted to talk about it because it was a good little example. We've talked about just before that going on air, GMG. Can we just go through the little what's actually happening and how we've played it and how we should be playing stocks in general?
Well, definitely. And you know what, Wolf? It's a story that we liked. It went to trend line. We told everyone to get in. You've got to hold these stories, and it's having a superb move. So, it's still a hold, right? There's no reason that you'd be getting out of it. And again, having a very, very strong move up today. So what you're most probably looking is, Wolf, is see where it ends this week. I think it'll so far so good. You want it to hold that candle's previous low. So I mean, if where you are now, I mean, if you want to put a stop loss on it, I think well, we'll use this week's low because I'm assuming that this week it's going to hold up quite nicely, the stock. So I think you could have a stop loss on this somewhere around that sort of 20, 25, 35, somewhere just around there. As long as it doesn't go below there by the end of this week, hold it. And you've got to carry on doing the same thing. Just look where that previous candle was. And as long as it holds above it and doesn't overshadow it, then just hold it. You can see back here in the past, Wolf, this is a classic example where it was holding the previous candles. And we got that first time it overshadowed it. And that was the start for, obviously, to come back down to trend. So as long as we don't get that overshadowing, just keep trying to lift that stop loss because it's looking very, very good at the moment.
Agree. Thank you for that. It's just I like to finish on a good note because it's very important. There's a lot of investors out there loving some stories, but maybe getting out too early, not having the patience. But if you're on a good wicket, Dave, you hold on as long as you can, because that's where you make your bulk of your money on that stories that you hold on for 10 years and you make 200, 300, 400%, right? Instead of that 5 here, 5% there.
Oh, definitely. 100%, Wolf. On that note, thank you very much, Wolfie, and have a great rest of the day.
See you this evening, everyone. Cheers.
Bye-bye.